In this video, you are looking at the Euro and USD 4 hours market chart. Does this look simple or complicated to you? We will study this chart to have an understanding of what actually happened here. The market was in an uptrend from here. While the market made a reversal from here. Just like every other market chart you see, this can actually be complicated or a simple chart. This depends on your approach towards it. Our focus will be here. Looking at the daily time frame. The market was at its peak here, and the market is now on a downtrend. We will analyze this area, what actually happened here. Carefully studying your chart is crucial, so as to find good entry levels in the market. There was a breaking trend. The market moved sideways here. Prices obeyed this support level, which later became a resistance level. At this point, let's select a marking object from our technical tool. This is to have a detailed information of the market movement. The market is clearly obeying this level. Here made it the fourth time it's bounced off this level. Study these points carefully. A harami candlestick pattern is formed here, while an engulfing pattern here. After the close of this harami pattern, a doji was formed, and this shows indecision in the market. Here is our point A. The absence of a bearish candlestick at the close of this pattern here doesn't give enough reason to go short. It can also explain why prices couldn't initiate a downtrend from here. At this point, market prices obeyed this level, forming an engulfing candlestick pattern. When you draw your resistance zone, make sure it touches as many prices as possible. Highlight this area. This is point B. What do you notice about the engulfing pattern at this point B? At the close of the engulfing pattern, there was a very good bearish candlestick. It was a confirmation that the sellers are in control of the market. This indicated that the market was likely to continue its trend. Here is point C. And this is a good entry point to go short. But selling at this point is a little tricky, because there is still a lower support below, yet to be broken. At this point, what did you notice? The market prices formed a rectangular pattern. This tells you that a downward breakout, especially at support level, will see the market prices continue the trend. Here, the engulfing pattern is an entry opportunity for aggressive traders to go short. But there wasn't a confirmation candlestick. This is a bullish candlestick with a price rejection. An aggressive trader who sold here benefited from the market. Let's insert a horizontal support line instead, so as to capture future market prices. There is a false breakout here. Here's an indecision in the market. And this bearish hammer showed a very good price rejection, with a long lower shadow. The candles formed afterward couldn't close below the hammer's lower shadow. Back to the support level. Here, there was indecision in the market. At the close of this bearish candlestick is our first sell entry. At this point, conservative traders will get their chance. If you are the trader that waits for confirmations in the market, then here is your chance. Point D, our first sell point. This engulfing pattern is another selling opportunity. There is a bearish candlestick after the close of the pattern, and there is a price rejection here. Now, the market is more simplified. We will name this sell arrow E. The support level is a new resistance from market prices. Here is another selling opportunity for you in the market. Here is a doji with a nice price rejection. And this bearish candlestick after it is a nice confirmation. Go short at this point, at the close of the candlestick. These selling points are triggered by this resistance level. Hence, if you are able to identify this level, then the market moved to your advantage. Here is another selling opportunity. If you have missed out of the previous market movements, without a good entry point, you can't get most out of the market. And also, the best level to place your stop loss. The engulfing pattern here is followed by a long bearish candle, which confirms the dominance of the sellers. You sell at the close of the long bearish candlestick. One good thing about expert analysis is that it simplifies market charts and provides entry levels. Let's call here point F. This points in the market are good selling opportunities for you. If you joined any of these entry points, you will be in for a run of pips. The market made a very nice trend from here. Apart from the above support level, other entry levels surfaces as the trend progresses. At the end of this corrective wave here, a sell opportunity is signaled by an engulfing pattern. When you sell, your stop loss should be above the high of the pattern. If you miss that, here is another opportunity for you. Place your stop loss above the high when you go short. If you are able to identify corrective waves in the market, it will be an added advantage to you. Its end marks the continuation of price movements in trend direction, just like the points here. When you zoom out, you will see a nice trend that yielded huge profits. And this run of pips lasted for over 1 month. Paying attention to details on the market chart will yield you more profits and minimize loss Always observe different price actions in the market before making an entry. Where should you place your take profits? For you to place your take profits, you must observe to know the market's previous lowest lows